All right, welcome back to another video, guys. So in this video, we're gonna break down how I made 3,600 bucks from my trading. I didn't want to make this video, but hey, my chat said, bro, people make $1,000 a week. I think slowly and slowly, I don't want to sound cocky, but I think like a legit mean, yo, this is like everybody from KCU is like they on board. They know. Legit, I'm forgetting what it feels like making couple of bucks a day. Don't want to sound cocky, but uh, yeah, it's I don't know how to say in the right words, in the best words. It's for me, 3,600 bucks. I'm thinking like, oh my God, it's not enough. Because I hold myself to higher standards. I think it should have been more, and I try to journal the trades, and I know where it went wrong, why I don't have a 10,000 all day. But I'm making a video because there's some sauce that I want to share, and the stuff that you can learn, so you can start doing this as well. You can learn how to do this as well. All right, and let's get to it. And I took basically three on. I took a lot of trades, but on three names. Okay. The major trades were three trades, but I kept, you can say, once I figured out the trades working, I kept like getting in, getting out, in, out, quickly jumping in 30 contracts and $20 move later, jumping out of those 30. So that's like 600. I did that quite a few times, but somehow, again, I'm only up 3,600 bucks. So, um, but let's break down why the trades that I took. First trade of the day, Tesla. Right, market's about to open, or you know what? Hang on. Let me break down the time frames first because I actually, even from KCU guys, man, somebody asked me a question. Why is like so about time frames? I'll break down the time frames. What time frames that I use? Um, right at the market open, 9:30 to 10. First 30 minutes, I'm only watching 2 minute charts. So when I'm watching 2 minute charts, this is super important, yo. Everybody, I want you to write down, take some notes. And if you're watching this video on YouTube, man, and you're sitting down and laying down on couch and fucking eating the chips or drinking a beer, bro, this is not Breaking Bad. All right. Turn this fucking video off. Do it in your office while you have a notebook. All right. And everybody on the live webinar, guys, please take notes. All right, please. Um, when I'm on a 2 minute chart, first half an hour, I'm watching 200 simple moving average on a 2 minute chart as well. But I'm also watching 5 minute 200 moving average. This is the only thing. People are like, even KCU members are like, um, are you watching 10 minute moving average to 10 minute 200 moving average? No, I only watch 10 minute chart. Only watch 10 minute chart after 11 o'clock. So from 10 o'clock to 11 o'clock, I watch 5 minute chart. From 11 o'clock onwards, um, to 3 or 4, whatever, I watch 10 minute chart. The only thing that I want to bring on here is I watch 200 moving average, big indicator. It's like I fucking love it. But that indicator is only important on the time frame that we are trading. Exception is first 30 minutes. Okay. After 11 o'clock, I'm not watching 5 minute 200 moving average. After that, that's it. Done. Does it make sense? After 11 o'clock, 5 minute 200 moving average for me is done. But so basically 5 minute 200 moving average, I'm watching from 9:30 to 11. And after that, it's strictly just 10 minute chart and nothing else. Somehow when like sometimes when the market makes a big move on a 10 minute chart and I can't find an entry, I sometimes will go on a 5 minute chart to kind of zoom in because 2 5 minute candles make one 10 minute candle. I'll kind of go into just to zoom in, see what's going on, pay attention to the volume, see what's happening. But I'm only trading on a 10 minute chart. So basically, I'm finding my entries and exits on a 10 minute chart strictly. That makes sense? So that's the time frames. That's the indicators, 200 simple moving average. Only exception is 9:30 to 10. I also watch 5 minute 200 moving average as well. So 9:30 to 10, 2 minute, 10 to 11, 5 minute, 11 to 3. I'm doing 10 minute and 3 to 4, the power hour. Um, you'll hear a lot of that crap on social media, people talking about power hours, last hour of trading. Um, they're full of shit. They have no idea what they're talking about. Last 1 hour is not for dumb money, and we are dumb money. I don't know if you know, but we're not the smart money, definitely. And the moment you're gonna start making mistakes is when you think you are when you're smart money. We know smart money have unlimited resources. We don't. Like, bro, what the fuck? Smart money can move the prices by buying so much and selling so much. We can't. So the power hour is where there's a quote that I used to I love back in the day. I love now. It went something like you the dumb money, the retail traders open the market. So retail traders open the market at 9:30. The smart money closes the market towards the end of the day. They close the market. And I very much believe it to be true because, hey, right at the early morning, bro, there's so many suckers out there. My goal is to find those suckers so I can take their money legally. Hey, are you doing it legally? You know what I mean? You can't walk up to a person in the street and be like, hey, give me your money. That's illegal. But in the stock market, you can do that. If somebody doesn't know what they're doing, go take their money. No problem. Don't want to say it, but hey, you can take food out of yeah, their family's mouth and it's still legal. But yeah, that's a game we plan. All right. So now that we know 3 to 4 is not the time, and if you see somebody saying that they have figured out a way to trade 3 to 4, no, yeah, no, fuck it. All right. I'm gonna use this so I can write. We will we talk spoke about time frames. Now let's talk about the second thing before I even move forward is bell curve because this is the reason why I only made 3,600 bucks. This kind of backfired today. So bell curve backfired. All right. Any system that you use, sometimes the system's gonna make you a lot of money. Sometimes it's gonna hold you back. But the reason why the bell curve exists, I'll explain what the bell curve is. The reason why bell curve exists at first place is to protect you from losing money. Its goal is not to help you make so much money. Its goal is to protect you from losing so much money. Does that make sense? That's a purpose of bell curve, so you don't lose a lot. All right. So what's a bell curve? Right at this works for pretty much this is like a bell. All right. The bell curve is doesn't matter if it's starting of the week. Let's say if starting of the week it's Monday. You starting the bell curve Monday, Tuesday, Wednesday, Thursday, Friday. You're finishing it off. If it's quarters, like so Jan to March, that's Q1. Then Q2, April to June, Q3, July to September, October, then Q4, Q1, Q2, Q3, Q4, right? But that works for pretty much every single thing on the week. Every single month has 4 weeks, right? So there goes week one, week two, week three, week four. I use this all the time, right? Even for the day, I use this. So for the day, it's rather the mark the first trade, second trade, third trade, whatever, howsoever I feel moving forward. Okay, but towards the end of the day, this is one reason why people go they were up 4,000. I'm sure this has happened to you. Let me know. Hey, anybody ever gone through this where you up fucking 400, 500, and then turns out you lose the money and you walk away red on the day because you were like, oh, I'm feeling so confident, and you are up so much, and then you walk away with either red or you walk away with small profits. That's because of not having a bell curve. Bell curve means the first trade of the day, small position size. And that was the reason why I only made 3,600 bucks because the first trade was Tesla, and Tesla happened to be the one of the biggest trades on the day. But it was the first trade of the day, and I did with small position size, so I didn't make enough money, and which is why I was surprised. I'm like, when I looked at my P&L, I'm like, oh my God, man. Like, what the fuck? How am I gonna pay the bills? Um, so that was because of this bell curve. Now, does that mean I should not respect it? No. Imagine the first trade of the day you do with big position size and it goes against you, and now you're down $1,000. I personally think it's easier to come back to green from minus 100 to say $500 green than minus 1,000 to even just to zero. It's super hard. All right. So that's why the bell curve exists. First trade of the day, second, a little bit bigger position size, third trade a little bit bigger, and moving forward. Now, what happens if the first trade is red? If the first trade is red, the bell curve goes like this up until you catch a green trade. Then it goes, becomes a bell. Does that make sense? So it stays even, or even sometimes drop. Like if I lose money on the first trade, it goes some like this and then picks up again after the green trade. So that's bell curve. That's done. And then comes the third point before we jump on to my trades is the pre-market pre-market stuff that I do. I was about to say pre-market shit that I do, but hey, yeah, keep it, keep it clean. Um, so what's the pre-market stuff? Pre-market stuff is basically like pre-market routine. I don't do cold showers. I would never recommend it. I think it's rubbish. People are like, man, I do cold showers every day. I'm still broke. Uh, I'm like, hey, of course. Um, ice baths, cold showers, none of the stuff gonna make you money if you don't know how to trade. So in the pre-market, wake up whatever time you want, but at least give yourself 30 minutes. At least give yourself 30 minutes, 10 minutes to make the levels, and 10 minutes to probably take a shit, because right at the market open, this gonna happen. And then 10 minutes to 10 minutes to just calm yourself down, have a coffee. All right, just keeping it real. Now 10 minutes. What for the first 10 minutes when you're drawing levels, I only like to draw levels on a 60-minute chart. All right, so 60-minute chart, draw levels, done. And the next 10 minutes is I don't read no news, I don't see nothing, I don't care. None of the stuff matters, price action matters. Next 10 minutes is usually me um pretty much just chilling, talking to my wife, just talking crap sometimes. Um, oh, it's actually the tea time for us. Like we actually have a coffee together and we just talk shit about people like whole day, like what happened. Uh, and the last 10 minutes, I meditate 5 minutes. Super important, guys. Super important. All right, meditate 5 minutes. I simply what I do is I sit down and I just focus on my breathing. Um, people do they're like, oh, what app do you use to meditate? Oh my God. Yo, please don't be so addicted to listening to orders that somebody has to tell you breathe in, breathe out. Sit down. If people be like so addicted to motherfuckers telling them what to do, they're like, breathe out. I'm like, oh shit, I didn't get that. Hey, I, I'm like, I didn't see that coming. So don't do app crap. All right. Basically, what you want to do in this 5 minutes meditation is you want to pay attention to um the moment you start thinking of something else, catch yourself how many times you bring your thoughts back to I sometimes hey I say here I and you know what I focus on this mic that I have sitting in front of me. So I have two mics. This mic is for recording videos, the other one's like when I'm actually on Zoom, on the live Discord live. I literally focus on that mic. That's it. And every time I think of something else, I'm just staring at this mic like a maniac. Um and anytime I think of something else, anytime my thought goes, oh, I have to take my cat to the vet. Now I need to bring my thought back, and I'll literally mark with a little dot on sticky note. So I want to know that I want to drop this number down. You see what I'm saying? How many times I think of something else in that 5 minutes? This is what I do. So now I'm usually like average is about two or three things. I used to think about like 20 things at once. So I've brought that down to so much that now I do not think about anything. I have control over my brain, that not to think about anything. I still do it, and I've been doing it a long time. So it's a slow journey, but it's a fun journey. But you get to the meditation is the act of bringing your thought back to your original thought, when your brain wanders off. All right. So when you're like, oh, I'm getting FOMO, you just need to bring that thought back. Oh, that's not the right thing to do. Calm down. That's pretty much what you can learn from meditation. That's the pre-market stuff. Then I start the market. Then I jump on live with my team and I say, where the fuck's my money? And this is what we do. And then goes let's talk about the actual trade. Now let's talk about Tesla. Pre-market stuff's done, the levels are done, bell curves, everything's good. Time frame I'm on a 2 minute chart, and I am waiting for a trend to set up. Any stock that I trade, pretty much every single stocks that I trade, I'm waiting for this trend to set up. Okay, so no trend, no trade. Trend's your friend. Easy. No trend, no trade. Um, and the trend usually, as a rule of thumb, man, I'm a little sick. Um, as a rule of thumb, the trend will usually pick up when we are breaking above or below the pre-market high or lows. All right. If the stock's breaking below the pre-market low, for me, I'm getting excited because that's the most recent. Thank you. That's the most recent level that we have in the pre-market where the buyers came around. Does that make sense? The most recent time when the buyers came along was in the pre-market. So you want to mark that. All right, mark the pre-market. The moment it breaks, you just know, okay, it could be a start of a trend. All right, we wait for a trend. Now, the trend's there. Stock opened around this 207.6. It went up to 208.5. It started coming down. It broke below the pre-market low. But what do we wait for? After we have seen a trend, after we have seen a move, wait for a pullback. No pullback, no, we don't know how way to actually jump in. So now we're waiting for a pullback. Nope. And we started seeing a pullback. Now, how do you know? This is a question that even my KCU students ask, how do you know that it's a pullback or a reversal? Anybody? How do you know it's a pullback or reversal? One simple rule of thumb is like, bro, forget everything. All right, forget volume, forget everything. One simple rule of thumb is to keep, I've been back testing, and this is another module that I'm putting together. LTP on steroids. This is the stuff. Forget everything. Forget volume. Forget none of the shit matters. Volume doesn't matter. I'm so big on volume. Volume doesn't matter. Nothing matters. Only thing that matters is pick the highest point of the day so far, like actual of the day. Pick the lowest point where we started seeing a little reversal. All right. We go to the Fibonacci's right on the side, right here. Go to the Fibonacci retracement. Mark your highs to the lows. These are the points. These are my settings. If you want to take a screenshot, these are my settings. The moment we break the moment we go and touch 0.5, that's it, done. Hey, the trend's not actually strong enough for me to trade it. It's doesn't matter if it's a trend continues or doesn't matter if the trend pullbacks, or I don't care. It retraces. I don't give a fuck. Like if it touches the 0.5 and starts move, I mean, hey, my grandmother can fucking run faster than the trend. I'll rather bet on my grandmother. See what I'm saying? Rather than betting on this. That's my thought. So if the trend is strong, it should reject at the 0.3236. If it's not as strong but still good, it will reject at 0.382. It might go close to this 0.5, but still, it's still counted as getting rejected of this. All right. The moment it touches, like physically, visually, you can see it touched. That's it. Please don't zoom in to a point you're like, oh, that 1 cent. Oh, no, this half a cent. Oh my God, still good. Nah, you pushing it. Visually, you can see it touched. That's it. Now, I drew the fib and I'm like, okay, so what's happening here? I got a pullback and it's getting rejected off the strongest fib point, right? And a pullback is there getting rejected of the strongest fib point, and after the pullback, entry is the break of this pullback candle towards the downside. Stop loss is right above the pullback candle, the entry candle. So how much I'm risking? I'm risking about 70 cents. But the profit targets simply become my yellow lines, which is the pre-market stuff. Now we have the trend, the pullback is there, everything is good. How to differentiate between a pullback and a reversal, now you know. And now let's see how it goes. Boom, it dropped. If you do things this way, now yes, if we don't have, let's say if we don't draw Fibonacci's, does that still mean the trend's there? Yeah, but just drawing Fibonacci's adds a layer of conviction into my brain where I'm like, yeah, I'm able to hold the trade for a little bit longer. So if something gives you an edge, why wouldn't you do it? Right. So this is the reason I like this Fibonacci's, and it just gives me conviction. And now I'll take some profits at 204. And then 204, I took some profits. Why? It's my hourly level. And which is the next point, which is we have discussed we discussed trend, we discussed fibs, Fibonacci. Now seventh is, man, there's so much sauce. There's so much sauce for YouTube for free. I don't want to post this on YouTube. No, I don't. I really don't want to post it. Um, Hey, if you're watching this on YouTube, you subscribe. I'm only posting this up until I get to 10,000 subscribers. Now they're not gonna subscribe. If I got to 10K, hey, now fucking subscribe, goddamn. Negative risk management. So what's negative risk management, fam? Um, please, 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 please follow this. And if you're like, but bro, I have a small account, man, I don't know what to say. With what you know now, why are you being a peach? I'm trying to keep it PG, trying to keep it like keep it real. Why are you being scared with what you know now? Why not do 3 contracts? Because I promise you, when um I promise you, back in the day when you didn't know what you were doing, you did bigger position size than you're doing now. Then you didn't know what you were doing, and you used to dump money like a maniac into a trade. Now when you know what to do, what you're doing, now you're being scared. What for? That makes sense. Why not? So if you're like, oh man, I have small money in my trading account, bro, 2024, go make some fucking money. What do you want me to say? Right, make some money, grow your trading account a little bit bigger, and so you're able to do extra couple contracts. Now, negative risk management. Let's break it down. So let's say if you enter at the break of this price point, this is your stop loss. All right. Let me change this color to a different color. Hang on. Um, green, green. Yes, green. Much better. Yeah, right there. Come on, go away now. Sweet. All right. Yo. So negative risk management means if you are entering here, your stop loss is right here, and you are entering at the, let's say your price is 350, and you did 10 contracts, right? That means 10 contracts at 350. This is your stop loss, original stop loss. The moment it hits your first profit target, you're going to take 50% off, like 50% off straight away. So let's say by the time it hits your first profit target, these contracts are sitting at 430. All right. 430, these contracts are sitting at, you're going to take 5 off. So that means minus 5, 430. Now you made $80 a contract times 5. 80 times 5. What is it? This is the profits that we are making. 80 times 5. Who's good at maths? 400. All right. $400 is in your pocket. And Nipsey Hussle says, all money in, no money out. Once the money's in my pocket, bro, that money's not living. I'm sorry. All right. I'm from India, bro. I'm from India. Once the money's in my pocket, nah, they ain't leaving. All right. Now what that means is, what if the stock it comes down, it touches your critical point, and it bounces? If it bounces, your stop loss on the remainder, like the 5 contracts that you're still holding, the stop loss on those is break even. So what's the break even price? 350. If the stock bounces here and goes and hits your break even, you get out. But let the market sort the good and bad for you. So this is the bad trade, this is a good trade. Let the market tell you which one it is. If it's a good trade, it'll keep going down. If it's a bad trade, it will stop you out. Right? And then what do? The next level, so this next yellow line, if the price comes down, what I'm gonna do? I'm gonna take another 50% off. Now you can't take 2.5 contracts off. You either gotta choose 2 or 3. Right? Personally, I'll always go towards, let me take more off than less. Okay. So I'll be like, let me take another 3 off. And these 3 might be at 490. Right? So where's the stop loss on the remainder? Still break even. That makes sense? If it comes down and hits your next yellow line, you're like, okay, you know what? I have two contracts now. Let me take one more off at 540. You took one more off. Now all the monies get added the bottom line. Now you have one contract. If it comes hits your next yellow line, now you have a choice. The choice is you can let this run and make extra 30 bucks on the contract, or you can just get out. And it's just not worth it. With one contract, making extra two, who cares? You're already up 1,000. So it doesn't matter. And that's the point where holding the trade is not rewarding enough. You take profit and you're like, fuck it, I'm out. All right. That is called negative risk management, because just in case if the stock bounces, you know, you're not losing any of the money that you already banked in your pocket. And unrealized profits is not your profit, is not your money. All right. Unrealized profits is your money. Unrealized is not your money yet. And this is the only way you will be able to let your runners run and make extra money and actually make money. Because, bro, when people say um, nobody goes broke taking profits, I promise you, all those motherfuckers are broke. All those people, it's only broke people say that nobody goes broke taking profits. Nobody goes broke taking, nobody gets rich taking small profits. You gotta let those runners run. All right. And that's it. Keep doing it over and over again. This is negative risk management. Um, and now this is how the trade went. Up until 10, this hit the next target. When it bounced, didn't hit the break even. We stayed in. Up until 10, we on a 2 minute chart. Actually, this trade was like super sexy trade. Oh my God. We jump into 5 minute because 10 o'clock hit. And here we go. Here we go. I jumped out. Yeah, I jumped out roughly around, I think roughly around here. I jumped out. I still was not break even. I was not break even. I just jumped out because I'm like, I'm done, man. I'm done. Like I was done for the day because I made money. I'm like, I'm done because I was like, I think I was like in one or two contracts at this stage. Because it was my first trade, and this was the biggest trade. I did add a few times, but it was the first trade, and I didn't do big position size originally from the original entry. It was just, towards the end, it was just one contract. I think two contracts left. It was not worth it, so I sold. But that was the first trade. That's the right. Beautiful. Next trade, AMD. AMD was a beautiful trade as well. Um, Again, same shit. Now it's gonna be so much easier for you to understand. 2 minute chart. The trade was taken before 10 o'clock, and let's go back. I somehow was this, yeah, somehow I missed this pullback. I don't know how. Oh yeah, I know how. On a 5 minute chart, on a 5 minute chart, we had 200 moving average sitting right at the bottom. Let me show you. So this is AMD on a 5 minute chart at that stage. Yeah, right here. Look at this. We had 200 moving average sitting right at the bottom. And what did I explain? Right early in the video. 200 moving average, I respect it. I didn't want to trade it. So I was like, yeah, no problem. I'll let it break below this. And that's why I didn't actually catch this pullback entry towards the downside. So that's why I was like, yeah, fuck it, no problem. But now we broke below the 200 moving average on a 5 minute right here, 140.7. We broke below that 140.7 mark. And now I'm waiting for a pullback, right? Look at this. Um, pre pre-market levels are there. The trend, clearly we can see the trend is there, right? We need to wait for the fifth point, which is pullback. Let's wait for a pullback. And you saw a green candle, a pullback, right? So what do we do? Fibonacci. Go grab your Fibonacci. See where it can come back to. You don't need Fibonacci. Again, you don't need Fibonacci's. You can visually count on the pullback, but it's below the pre-market low. It has a level right there, has a Fibonacci right there, and it's about the confluences. And then went and almost touched the 8 exponential moving average. Hey, what's happening here? You know what I was thinking. I'm like, oh my God, this looks good. If the lows of this particular candle breaks on the next candle, stop loss right here, I'm going to short this. And that's exactly what we did. Profit target is the yellow line, 139.1. It went there, it didn't touch up, so I never got out. So my stop loss is still sitting at the same price point. It tried to bounce and then bam, took some off. The negative risk management. What happened? You hold your runners. And this was one of those trades where it started playing with our feelings. Um, and it went and hit the break even. So what did I do? I let the stock market decide if it's a good trade or a bad trade. It hit my break even price, I think roughly around here. But I let the stock market decide which one is a good trade or bad trade. I did the same thing on Tesla. Market said it's a good trade, so you can hold it. I did the same thing on AMD. Market said it's a bad trade, please get out. And what did I do? I got out. Now, what happens after I get out? None of my business, right? And don't be toxic. It's like I had a friend of mine who was, I told you guys on another other day story as well. He got super toxic because his ex moved on. Right? He got super toxic, and we were like, bro, doesn't matter, man. You guys broke up like fucking years ago. Who cares? But man, she used to be with me. Like, it's the same mentality if you do with your trades. If you think that's toxic, but with your trades, when you jump out of a trade, when you let your trade go, you're like, all right, done. And now you're like, but why is it still succeeding? And that's like you see what I'm saying? You're being toxic. So let your trades go. It is what it is. All right. And then it went. But you know what? I was like, doesn't matter. It doesn't matter. I made the money, initial money that I made. Sweet. I don't care. And I made 20%. And yeah, this is how the trade went. Right. So pretty ugly. All right. And then comes QQQs. QQQs was not like, it was not like fun trade. It was like boring fucking trade. This trade, I think this trade was roughly around this price point. Yeah. Let me check my broker, yo. Yeah. Oh, this was super small size. This trade was right here. It was super small size. This trade was right here. Why? Look at this. We have on a 5 minute chart. This is after 10 o'clock. And no, I actually called it out. I said, this is super risky. Please be careful. And this is the trade. Fibonacci's. Check this out. It came down, bounced back to the fib, bounced back to the 8 exponential moving average. I got this pullback candle, and all these pullback candles, for every single candle, what I'm doing is, now this is not the candle that we want to see. Why? The pullback candle has to be contained. Right? Now I'm giving too much sauce and I'm feeling sick already. Um, but there's no point giving you half the sauce, all right? So if this is the big move, the next candle can't be like this. It has to be fully contained within the direction of the move. It can be like this, no problem, if you're trading the puts, but it can't be breaking below already. So this is already breaking below towards the direction of the trade that we want to catch. So this is not the pullback candle. I'm still waiting. All right. Now this is this a contained candle? Yes. Why? Because check this out. From the previous candle, it's in the direction of the move. If you're catching the downside, it's contained. So I was like, okay, if it breaks below the lows of this candle, I'll jump in. Right. And then the next candle happened and it went like this. So I'm still watching. I'm like, okay, now I'll watch the break of this candle with a stop loss right here. The reason why I did super small position size was because my hourly level is sitting right here. So basically, I'm risking more than my reward was. So I was simply betting that if it breaks below this, I might be able to catch. Now, was it a good trade? Um, would I take this trade with 100 contracts? No, I should not have taken it with 10 contracts as well. You see what I'm saying? If I wouldn't do 100 contracts, why even do 10? That was a wrong trade. I should not have taken it because the risk was too wide. But this is the trade that I took. It worked out beautiful. But I sold everything here because I knew that I was doing the wrong thing. All right. So basically, this trade, I'm glad that it worked out. But if this trade would not have worked out, think about it. I was risking this. I was risking $1 to make 77 cents. Is that a good stuff? That's a good trade. No. So, which is why I didn't even do the negative risk management thing. I'm like, oh my God, man, I fucked up. I should not have jumped in. I sold and I'm like, I stayed quiet. Done. It is what it is. Now, if I would have held, probably would have made way more money on this dump. But hey, it is what it is. And then later on, I liked this entry, but I didn't do it because of my emotions, because I broke the rule early in the day on QQQs, which is why I think you don't break the rules, because then it just like it kind of ruins the vibe. See what I'm saying? Don't break the rule early in the morning. Even if you make money, it ruins the vibe. And then I would have taken this trade otherwise. Easy. Because this is a beautiful trade. But I didn't do it because, as I said, my vibe got ruined here. And that was my last pretty much trade. And then I just dried out for the day. I'm like, "All right, that's it. Done." All right. But this is the breakdown. So you now know time frames. Now you know how to do bell curve. Now you know the pre-market stuff that we do, trend pullbacks, the containment candles. I'll just my 5.5.2 contained candles. Fibonacci's negative risk management, and this is the system. This is how you make money. If you don't have and there's like about hey, there's about probably 50 more things that goes in the system. All right. But this is the big like bigger systems. The stuff that you need. So go out there, make some money, and go enjoy. All right, guys, that's all. You guys have fun. This is how I made 3,600 bucks. Um, and I'll see you guys next time. All right, peace. Goodbye. Good luck. I'm out.